Hey everybody, I'm Mike Desepoli and welcome to the Heritage Market Minute for Wednesday, October 20th, 2021. We're doing a midweek market report this week. We had a conference on Monday and Tuesday, so we wanted to deliver some up-to-date news for you, talk about market activity, what we're seeing in these markets, and how we think the trends play out through the remainder of the week. So we are right in the thick of earnings season now. We have 70 S&P 500 companies reporting this week, and so far results have been fantastic, with earnings and revenue coming in above expectations, a significant percentage of the reports so far. Our big banks were the first to go. They looked great, and now we're getting into some of the other large cohorts in the economy, so we'll be watching very closely for companies reporting over the next couple of days. We are seeing the market here going for its sixth consecutive day higher in a row. Nice 5-day win streak for the S&P 500, NASDAQ, and Dow Jones as well. And we're seeing a big seasonal change here in the markets, right? We've talked about our expectations, how we thought you would start to see this market firm up and move higher. We're getting that type of activity that we like to see. And more importantly, we're seeing good earnings that are being rewarded with good moves in stock prices, right? Because the last thing you want to see is great financial results, but stocks continue to sell off, which would suggest that there's some sort of a disconnect between price and news. Okay, so we're not seeing that. Market's looking very firm here. Again, as we move towards the latter half of the week, we're going to see some larger market components reporting. Tesla, as an example, of a stock that we don't own, but they report here after the close today, and certainly will have an impact on the markets based upon the reaction to that report. Later in the week, we'll get some more data on unemployment claims, right? We want to see how that job market is doing after a less than stellar jobs report from the previous month. We're looking at those weekly unemployment claims to see are claims starting to shrink or continuing to expand, and what type of strength that we can expect to see in the labor market. Interest rates remain unchanged right now. A 10-year yield sitting around 1.6%. So kind of right in that midpoint range of what we've seen over the last year, from a high of almost 2% and a low of almost 1%. We continue to believe that interest rates will not be a problem, and the Fed will remain very patient in their approach. So if you have any questions, reach out to us. We will be back on Friday with the Heritage Market Pulse to wrap up all the action. So keep an eye on some of those big company earnings reports and financial results, and we'll see you later this week. Have a great day.